Welcome to Market View with Ike Iosa and Friends. The show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now.
Well, good morning. Mike, I will be your host for my news. Today's guest, our good friend, Mrs. Erin Swenlin. Hi, Erin. How are you?
I'm doing well.
Erin, October is known not just for big declines, but also for being a bear market killer. And since the end of July, we have had a downturn in the market. I'm curious if the technicals are supportive of the notion that we should see a bottom soon, or this is the beginning of a new bear market. What are your thoughts?
Well, I have to say that we're starting to see our indicators suggest that we might get a bounce or a bottom here. I'm looking at the 400 level as a pretty good level for a possible bounce. I would just say, we'll look at my charts, but I would just say that whatever rally we get, I wouldn't look for it to be meaningful. I mean, I don't think it'll be sticky, but everything's so oversold, it's time. But we've also started to see some really interesting things on our charts.
Okay, let's take a look at the SPY.
Right, so the SPY obviously struggling. It's been a dastardly decline, but it has moved most of our indicators into oversold territory. The stochastics are now below 20, reading at like 275, the latest that I've seen. And the PMO is oversold, but it is still in decline, which tells me, yeah, we probably have more decline to go. But yesterday we were feeling a little more bullish, and part of that reason was that big spike in total volume. And it really had the feel of a blowout, and we started to see some bullish indications on our chart. So I'm excited to show you some of those.
Our next chart, new highs, new lows.
So one thing that we noticed yesterday was the fact that, notice how new highs really pared back yesterday, and it was a deep decline day. And seeing that many new lows pair back told us that something must be going on under the surface. That's a positive divergence. It'll be interesting to see what they look like after today's decline. We did start the day on Friday here with some decent movement to the upside, but that has definitely changed. So, even though we had some of these bullish indications, they're not coming together just yet. But that was a pretty interesting sign, I would say.
How about the Swenlin trading oscillators?
Yes, so I brought the chart that has my Swenlin trading oscillators on it in the top two panes, and then the other are intermediate term breadth momentum and volume momentum indicators. And yesterday on that deep decline, look at what the Swenlin trading oscillators did. They turned up.
Yeah.
So we have a positive divergence on new lows. We have the Swenlin trading oscillators turning up on a decline, but the intermediate term indicators still look pretty sickly. And while they are oversold, they can get further oversold. So this is what's telling us that, yeah, we're due for a bounce, maybe like we saw at the beginning of October, but we don't really see that being sticky. Like I said, I'm more than likely any kind of bounce we get is going to be limited in time frame.
How about our next chart?
The bias chart. Yes. All right, so our bias assessment. This is really some of the very best participation indicators out there, the Silver Cross Index and the Golden Cross Index. The Silver Cross Index measures how many stocks have a 20-day EMA above the 50-day EMA, or they have what we call a Silver Cross, 20 above the 50. The Golden Cross Index measures how many stocks have a 50-day EMA above the 200-day EMA. And you can see both of those indicators are in decline. They're both below their signal line, so that gives us a bearish bias in both the intermediate and long terms. Another suggestion that any kind of rally is going to be limited. But what also interested us was yesterday on that big decline, we saw more stocks with price above the 20-day EMA. We didn't lose any. We have positive divergences on stocks above their 20 and above their 50-day EMAs. So there is some bullish indications out there that would kind of point to the fact that, we could see a nice shift to the upside. I just think that for now, that shorts and hedges are still your best bet. But if we start to see some upside, just be prepared for maybe letting go some of those hedges for a little while. I think most of your short positions are going to be fine just because I don't think that any rally is going to be lengthy. So I think some of the short positions should be okay, considering, 80% have their price below the 20-day EMA. There's some serious problems out there. So finding longs is going to still be very difficult.
And how about our next chart, XLB?
Yeah, so every Friday I look to see what the sector to watch might be. Something that's showing either some new momentum, just participation doing the right things, and utilities are clicking. Consumer staples were clicking. They really saw a big, deep decline today. And so I'm not really thrilled with how consumer staples are acting right now, but utilities look pretty strong, but materials really interest me right now. And part of the reason, it's not the most bullish chart. I will admit that. I don't like buying anything where the PMO is moving lower. And the PMO is moving lower on materials. But and the RSI is negative. There are a lot of things that aren't great on the chart, but what is interesting is that the percent stocks above their 20 and 50-day EMAs are starting to rise. So we're looking at maybe a sector where we're going to start seeing some upside movement, maybe some rotation in this area, because we're starting to see a little bit of it right now with participation starting to expand above the 20 and 50-day EMA. So it's still a pretty ugly chart, but I think that materials might be a place to keep an eye on next week as we go in.
Talking about materials, our next chart is the steel industry group, which actually that looks good.
Yes. It does, doesn't it?
Yeah.
I really like the look of what's going on with steel. What I do is when I find my sector to watch is I like to go in and kind of dig around in the industry groups and see which ones are performing pretty well. And steel, I think, it's set up a V bottom. It looks pretty good right now. It's outperforming in a big way. Stochastics are rising. The PMO is nearing a crossover buy signal. So I think steel might be an interesting place as to keep an eye on for next week as well. And I did bring a steel stock, which everybody should be mostly familiar with, I would think.
Yes, U.S.
and
Steel.
And that is U.S. Steel X. And you can see that rally. We're getting a V bottom as well on U.S. Steel. It's actually performing better than the group itself. You can see that in the very last indicator pane. You can see the stock versus its industry group. So steel is doing well, but this one is also starting, is an outperformer. So if you're going to be in that group, this is one of the stocks you'd want to consider. It's also doing very well against the S&P. So maybe it's, staying in line with the group, but it's really outperforming the S&P because the group is doing very well. So I think this looks like an interesting play. I did mark about a 7% stop on it if anybody's interested in it. The PMO is still in decline, so personally I would like to see a breakout before I got involved. But depending on your risk appetite, it could be an interesting play.
Erin, anything else you'd like to add?
The only thing I would add is that, at DecisionPoint.com, we do run a 2-week trial. So if any of you want to try out our reports, the DP alert goes over pretty much what I was going over at the very beginning, our bias chart, our Swenlin trading oscillators. So you'll get a daily read on what those are doing in the DP alert. And then I have DP diamonds where I do kind of what I did at the end of this, where I find sectors that are looking strong, industry groups that are looking strong, and try to find some stocks that will ride that tide, and that would be DecisionPoint Diamond. So we have 2 really great products out there. If you want to try them out, use coupon code DP Trial and then the number 2. So DP Trial 2, and that will get you 2 free weeks to try out our reports to see if they help you out, which I think they will.
Erin, thank you. Have a great weekend.
I will, and you as well.